Kunal Bothra, as always, joins in on the show. Kunal, hi, good morning. The question on everyone's mind, that dead cat bounce, the short covering-led rally, how much more can it sustain?
I think it should sustain. It's been a good sector move over the last couple of days. It's been a good comeback in terms of data points. Very strong participation across market breadth. Yesterday, for example, most part of the day when the index was almost flat, except for the last half an hour, 1 hour, you had a market breadth which was, I think, almost 2:1 or 3:1 in the favor of advances. So that told you that it was more towards the entire market breadth recovering. Now a couple of days back we were highlighting mid of last week somewhere that there was almost 86 to 90% of the stocks which are fallen below their 20 DMAs and their 50 DMAs as such from the mid caps and the small caps. That number has improved back towards 70-74%. Now that happening in the matter of just a couple of days is a very sharp sign of an improvement for the market. The India VIX falling from 15.5 to 15 levels, rather sub 13.5 levels, which we saw yesterday on closing basis. All of these are extremely strong positive for the markets. Sector participation, I think that's the more important part, because with every new trend or even a bounce back, you would want to identify leaders in terms of sectors. And those leaders start to shape up across the board, not just the previous the sectors which have rallied up, but new sector participating. I think that's also auguring very well for the markets. So you saw not just the banking stocks, which did pretty well, metal stocks did pretty well, defense stocks, PSU names, energy stocks. So there were new additions to the sectors which start to look attractive. And last but not the least point, when we look at the derivatives data point, the put-call ratio for the bank nifty has crossed 1. And we've generally seen that when put-call ratios for a certain sector or a thematic index as such, when it crosses 1 kind of a mark, it tells you that the markets are going into more of a confidence zone for that particular index.
But Kunal, what's the leadership sector right now? And after yesterday's move, would you say that actually defense could lead the charge next?
No, I think defense could be a momentum play over here, Aisha, especially going into the budget, because we all know that defense, railways and PSU stocks, they generally go into a very high anticipation into the budget. So it could be a very short-term momentum trade. You might play for another 3-5% on the higher side. But if you're looking for trends, there are two trends which have been established very well in the last couple of months, and that's bank nifty or the banking index as such, more towards the PSU banking names, and the metal stocks. Yeah. So these two asset classes have done very well for themselves. And that, I believe, is a very strong signal that you are carrying forward the momentum for these two sectors, even at a point when the markets were very tough and volatile the last week, and then now in this recovery phase.
Kunal, how do you play the entire budget theme now? You're starting with budget today with economic survey. There's also the BSE expiry today, which is there. And then you have only 1 day before the budget which plays out. And on Sunday, most likely the volumes are going to be low because institutional volumes will be absent on that day. How do you play this budget, and how does an investor look at positioning itself from an F&O point of view?
See, I think from an F&O point of view, when you look at, as an index trader, we look at breakouts. So I think it's always better to wait for that breakout to happen, whether it happens on the budget day or maybe a day prior. Difficult to anticipate, but wait for that breakout. When we look at technical charts, 3 consecutive days of positive recovery after a sharp correction is the first signal that bulls have mustered strength. We had 2 consecutive days. Today could be the 3rd day, where if in case the markets close, say, on a flattish positive note also, that could be a confirmation that we are looking at a potential bounce back, and not just a bounce back, potential breakout of the 25,500 mark. And then I think add to the fact that these are all momentum sectors, the defense names, BEL, etc., the PSU stocks, on the railway side, all of these are pure momentum plays. You need to play that trade for the next couple of days going into the budget.
So your trades for the day?
So of course, the first one is from the PSU pack. Coal India is something. I've taken a slightly low to moderate beta stock within the entire pack, but that's a chart which is looking extremely encouraging, coming out after almost 3 or 4 quarters of a major consolidation, heading towards a breakout of 430, 435 as a barrier. So would look out for targets in the range of 460 for Coal India. Stop loss could be kept closer to 436. The second would be a buy on RVNL. That's another chart which is looking extremely attractive. In fact, over the last 1 month, the stock has managed to break past our major trendline resistance. It's a falling trend line for RVNL. The break above 330 levels yesterday on the spot basis confirmed the breakout for the stock on the spot on the short-term charts. So we'll look out for 360 as a target and stop us at 332.
Okay, on that note, let's take a very quick break. A lot of momentum plays, leadership sectors like, of course, banks and metals is what Kunal highlighted. We will address some of those plays after this very quick break. We'll tell you How much more of a headroom could the defense rally have in store for us? We'll have our experts join in on board.